Today is Monday, March the 14th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start with the financial markets this morning. Several major central banks are meeting this week. What policy changes are likely to be announced?
Okay, well, first of all, we have the Fed meeting on Wednesday, and it seems extremely likely that the Fed will raise rates by 25 basis points at that meeting. Also, though, there is only a 4% chance that they may keep rates unchanged at 0 to 25 basis points. So we'll see how that works out. But it's the overwhelming viewpoint, consensus view is that there will be a 25 basis point hike. Also, then on Thursday, we'll have the Bank of England. They are likely to hike rates as well by 25 basis points, possibly more. Well, they have already raised rates 2 times since December. And then on Friday, we'll have the Bank of Japan. And they have been extremely adamant in their viewpoint that they are not on a course to hike interest rates. So from an interest rate differential expectation, a point of view, that has very important implications for the Japanese yen, which I'll get to in just a bit.
Alan, talking about the 25-point increase that's expected here in the U.S., in the event that that's what actually does come out, it really should not have much of a market reaction whatsoever, should it?
Not on the dollar index, since it's widely anticipated. In fact, you're right, it probably won't have much of an impact anywhere, since that is the consensus view. Anything outside of that, of course, would, but since there's a 96% probability, according to financial futures markets, of that 25 basis point hike, I would say markets will not respond to that news.
Right. The stock indexes continue to focus on interest rates in addition to continued geopolitical situation. On a spread basis, which of the major stock indexes would outperform the others in a higher interest rate environment?
Well, traditionally, it is thought that the S&P 500 companies are better capitalized than companies in other indexes, particularly in the NASDAQ. So the better capitalized companies would be less adversely affected by higher interest rates. So that would imply that the S&P will probably continue to gain on the NASDAQ companies, which often are somewhat undercapitalized and would require more funding. Of course, then that would be at higher interest rates.
Finally, Alan, there's been some movement in currencies of late. What might be some of the best trading opportunities in the currency markets?
Well, I think we'll probably continue to see flight to quality buying coming into the dollar index. Also, interest rate differential expectations still supportive to the dollar. But I think that the one currency that has the weakest fundamentals by far is the Japanese yen, with the Bank of Japan likely to not change policies and keep their ultra dovish interest rate policies going forward. From an interest rate differential point of view, the yen, which actually today just fell to a 5-year low, I think will probably continue to decline. So any gains that you do see in the yen, I believe, are likely to be selling opportunities. And the yen, I think, is a long way to go, price-wise and time-wise, to the downside.
Thank you. Well, Steve, turning now to the grains, the volatility continues. Why and how long do you think it'll continue?
Well, we regressed into trading headlines. The overnight calls were higher on talk that because of the Ukraine war, the shipments out of the Black Sea, both wheat and corn, will no longer or will continue not to be shipped. Then the first bearish headline was that Russia asked China for military aid. The next bearish headline was from the Undersecretary of State saying that there might be positive peace talks today between Russia and Ukraine. The final bearish one was that China had to shut down Shenzhen City, which is a major port for China. And the concern is that that could slow imports of all commodities, and all commodities sold off pretty sharply led by crude. The port, I guess, is expected to remain open, but again, the markets were on the defensive. And then the last rumor that we had was that Russia just announced they were going to ban all wheat exports. Ukraine has already announced they're banning exports of everything, including fertilizer. So the top headline that we're trading right now is anything coming out of Ukraine because they are so important to exports of especially wheat, corn, and sun oil. And I expect this volatility to continue because as we get closer to April 1, we're going to start trading U.S. weather.
Steve, in regard to the port that's closed in China, why?
It was because of COVID. China has a zero tolerance. So if there's any COVID cases at all, they lock down the city. And the cases are escalating in Hong Kong. And so I think that's the main reason. It's interesting in that here in the United States, COVID cases are coming down, but in China, COVID cases are going up.
Steve, what did the USDA say about the South American and U.S. supply and demand last week?
The USDA did not give anything for the bulls. They pretty much kept a lot of the corn numbers the same. They did raise soybean exports, but not enough to satisfy the longs in the marketplace. And they did raise world wheat ending stocks. Since then, Argentina announced that they are eliminating any export licenses for soybean meal, soybean oil, and also possibly wheat. And then it looks like, from an export standpoint, Brazil will run out of soybean for exports as early as September. So the market's trading more of a corn carryout of 1 billion bushels, a bean carryout of 200. And if we extend down the road, how many acres U.S. farmers are going to plant in beans, a record yield, increase in both crush and export demand. For 2022-2023, U.S. soybean carryout could be as low as 75 million bushels. Now, we never get that low, so price has to ration demand.
Finally, Steve, lastly here, can you please give our viewers an update on the latest U.S. weather forecast?
NOAA came out recently and said that La Nina is going to continue into the spring. What that means for the U.S., along with a negative PDO and kind of an 18 to 20-year sun cycle, is that starting mid-April, you're going to see a ridge develop into Kansas, and that ridge could expand north during the summer growing season. But right now, our weather guy is pretty convinced that we're going to at least see dry weather in Kansas during their wheat growing season, and maybe dry weather in Iowa during the corn and soybean growing season.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests, should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.